What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So MSTY, adding MSTY back has been huge for the dividend snowball effect and buying dividend growth stocks. I'm going to show you what it did yesterday with my dividend portfolio. And again, I always say dividend growth always wins. There was a stock split with Tractor Supply, which is good. And I have Tractor Supply in my dividend portfolio. But I like the income from the Yieldmax ETFs. And specifically recently with MSTY's passive income to buy my dividend growth stocks. So I'm going to show you what it's doing and helping create the dividend snowball effect. I don't have time to really do options. I may actually consider having a advisor do options for me on Fidelity or Schwab. I just, I have the income to do that. I really have to discuss this with a advisor. That way I can maybe use some passive income with options and use that to turbocharge my dividend portfolio and give them a small fee. That's fine. I'm going to be working as an NP. I got a lot of things to do, and I'm not as experienced with that. So I use the synthetic calls or the passive income with that, with the Yieldmax ETFs, the Roundhill ETFs, and the Pro Shares and all them. I let them do it for me. That's fine. I'll pay a small fee. It'll help turbocharge my dividend portfolio on M1 Finance. I can't do options on M1 Finance. So I need to find alternative ways to get options income, and that's by the Yieldmax ETFs. And MSTY has done incredible for me recently. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my passive income right now. So first, since inception, MSTY is currently beating the S&P 500. Don't expect it to beat MSTR. Don't expect it to beat the S&P 500. Now, again, my dividend portfolio, my niche, my YouTube channel is with the dividend portfolio. Yes, I have funds with VGT. Yes, I have NVIDIA. Yes, I have Apple and my IRAs. But again, my niche is focused on my dividend portfolio on YouTube. So don't expect these long-term wise, price per share wise, to beat the S&P 500 or outgrow them. It's just not going to happen. This is strictly for income and synthetic calls. So I just want to be clear with that with MSTY and these Yieldmax ETFs. There is a big risk, but right now the reward is better than the risk. So I'm going to jump to the income trends and the distribution trends of MSTY. So currently, right now, you're seeing the distribution for share. Right now, again, it's very volatile. So, Bitcoin's doing good, MSTR is doing good because of that. But let me show you the distribution for share starting in April 2024. So 412, May 252, June 303, July 233, August 194, September 185, October 419, November 442. So you're seeing the distribution of the Yieldmax ETFs with specifically MSTR. So looks pretty good right now. So I'm going to jump to M1 Finance, show you how many shares I have, because a lot of you are new to this YouTube channel, and I'm going to show you my plans with MSTY. So currently I'm at 77 shares of MSTY. Okay, so the goal of MSTY on M1 Finance is to buy dividend growth stocks. I'm going to show you my most recent trends. Okay, I made a lot of money past day, or this Friday, and I threw in 350. So you're going to see what MSTY is doing and the Yieldmax ETFs to my dividend portfolio. So look, $761 was thrown in Monday. So 761 minus 350. That's how much I made on Friday. And I added 350 this week, and this is what I bought. So yes, TCPC, BlackRock, Capital Corp, and BBDC are high yielders, but you're looking at Aflac, Yum Brands, and abbvie, which are powerful dividend growth stocks. So I'll just give you an example of Aflac and how it's looking right now. Now, the income from MSTY, and I'll show you my most recent income from MSTY and the Yieldmax ETFs, but I just want to show you what it's doing. So I'll jump to the income, and then I'll show you an example of a dividend growth stock like Aflac. Now again, dividend growth investing always wins, and some very good stocks like Aflac have done extremely well against the S&P 500. This is in the past 5 years. It's up 95.25% versus the S&P 500, 84.38. A dividend yield of 2.26%, a PE ratio of 15.47. The average volume is 2.08 million. The market cap is 57.07 billion US dollars. Year range is 75.08 to 115.50. Previous close is 102.74. So you're seeing something that is beating the S&P 500 currently. And will it beat the S&P 500 in the long term? We'll see. But so far, so good. Now, I'm going to show you its revenue trends and dividend history, its most recent revenue trends and earnings report. So here's Aflac. It's sitting at 102.74. Since inception, it has destroyed the S&P 500. It's up 26,936.84% versus the S&P 697.93%. That's since inception. In the past 5 years, it's actually still beating the S&P 95.25% to 84.38%, has a dividend yield of 2.26%, a PE ratio of 15.47. The average volume is 2.08 million. The market cap is 57.07 billion US dollars. Year range is 75.08 to 115.50. Previous close is 102.74. So you're seeing a huge dividend growth stock, and many dividend growth stocks have run circles around the S&P 500. So I just want to make it clear, my long-term goal is really to have the income from my high yielders and business development companies to be thrown into Aflac and many other dividend growth stocks. Now, am I going to retire in my 50s? Probably not. Eventually I'll probably get married. Eventually I'll be buying a house. So income's going to be focused on that. And, kiddies, if I have kids. So, that's highly doubtful that I'll retire in my 50s. Is it a possibility? Yes. But, myself working in healthcare, if I work for a good hospital system, the health insurance is very important. So that's one thing that needs to be taken into consideration as well. I don't believe a 403B or a 401k is enough for retirement. So again, I'm taking a I haven't even calculated anything, with retirement stuff. Let me land a nurse practitioner job, which I'm making way more travel nursing, which is kind of crazy. But sure, they can turn me down for numerous nurse practitioner jobs because I'm a new grad. But funny thing is, the hospital system that has turned me down for jobs is paying me as a travel nurse. So way more. So that I find that very ironic. But let me show you its dividend history. This is what makes the dividend snowball effect huge. So I'm just going to start in 2018. It was 26 cents, 2019, 27 cents, 2020, 28 cents, 2021, 33 cents, 2022, 40 cents, 2023, 42 cents, and then 2024, 50 cents, and 2025, 58 cents. So it has a low payout ratio. 29%. That's good for a dividend growth stock. Low payout ratio is good. Number of dividend increases in the last 5 years at 6. Dividend growth in 5 years, 14.63%. So if you bought one share, you made $2 with a 1.95% dividend yield. So again, this is what you want to see. Dividend growth in 5 years, dividend and the payout ratio, low payout ratio. This is why I'm focusing my income stocks into dividend growth stocks. When I have sufficient income to fund these dividend growth stocks, I will be rolling. And then in the future, 100% of my resources will be focused on dividend growth stocks, which still, yes, I'm kind of doing a reversal, but I'm turbocharging my dividend portfolio with the Yieldmax ETFs. There are people that have made a lot of money with options income and have turbocharged their dividend portfolio. This is an opportunity with the Yieldmax ETFs. If I can make at least $5,000 a year with passive income reinvested into dividend growth stocks, just imagine that. Can that be a possibility in a few years? Could be. But the income, again, the income has to be distributed in dividend growth stocks. I will not be successful with this dividend portfolio if my dividend growth stocks are not bigger than my income stocks. Yes, I'm a value investor. Yes, I'm an income investor. But we're looking at long term. I always explain it like the tortoise and the hare. The hare is winning now, but the tortoise is going to win long term. 15, 20 years from now, see, I'm 39, 59, that is going to be huge. And I'm going to be getting raises because of dividend growth stocks. People have a pension, they make a set income. Okay? Myself, dividend growth stocks are my pension and I get raises. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow on Christmas. I will be working a Christmas shift. I'll take the time and a half so I can turbocharge my dividend portfolio and celebrate with my family after my shift. Take care and have a good one. Have a really good Christmas Eve. Have a really good Christmas. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. It is best to seek financial advice from a financial advisor and tax advice from a tax advisor. My YouTube channel, entertainment purposes only, very transparent with my investments, with my dividend investing journey. You can lose a lot of money, so be aware and do your due diligence. You have to be, you can lose money. I'm just telling you that. Have I gained a lot of money? Absolutely. I'll give you an example. Rich Uncles, it was a really good REIT. Pandemic destroyed it. I could have had a lot of good returns, a lot of good passive income, but look what happened. So you have to be aware and realize that you can lose money. I myself, 39, single, no kids, no student loan debt, no car payments. Okay, so I can take a loss if something happens. It's not a big deal for me. For you, it may be a different story. So that's why you need to go see a financial advisor. Take care.